Hello, 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 hello. Good morning, good evening, good afternoon, wherever you're watching from. Welcome to the Stock Market Technical Analysis Daily. Today is Thursday, February the 18th, 2021. Well, today is the business end of weekly option. Well, when we say the business end, meaning you hear me sometimes refer to Wednesdays and Thursday as payday. Sorry, as I struggle with setting off of the camera there. This morning there's definitely lots of move across for us weekly option traders to take advantage of them. So that's what we will be doing over the next, let's say, 8 plus 20, about 30 minutes on here. So hang around, take your cup of coffee because it's gonna be a fast ride. All right. Before we dive in, let's say hello to Miss Festus, Zorbon. Good morning, Miss Marcy. Welcome to the show. Without any further ado, let us go ahead and dive in and start by the US equities through its ETF, exchange traded funds, namely our friend SPY. As we go through trading view on here, yesterday, for whatever reason, my MACD just, so let me reset this on here. All right, so you guys are able to see the screen overall. I'm always struggling with this, folks, as you know, right? So let's start with this is the 15 minutes yesterday where we gapped down yesterday and we put in, a SPY puts in we. See, I'm speaking in we as if I don't own SPY. I don't own SPY. I'm merely trading. And so on Tuesday, because Monday was closed, in reason of President's Day, in observance of President's Day. So on Tuesday, was it Tuesday, when we resumed, we closed. It was a relatively flat day, if you will, after a small gap. We closed at 390.51. Yesterday, we opened at 390.42. The range overall was literally a low here within the first candle at 389.33 and then close at 380.92.46, less than 3 points. That's nothing, folks. How do we, it's actually easier to see if we go to the daily chart. Look at the size of that candle there. It is better, but we notice how we close exactly just above the yellow line exponential moving average 8. Nothing is random, folks. And moves on SPY, they are not random. They are computer generated. So they know, the algos know exactly where to go, where to finish in regard to what they want to do. What they want to do is to maximize the profit for the owners. That's what those algos they are designed for, right? So today being this week being option expiration, the monthly option expiration and the weekly, so the third Friday of every month, no matter what, is that's those expiration. You need, as an option trader, to be aware of this. Meaning, as we go toward that, there are some shenanigans, wahala, if you will, drama, if you will. How do you say wahala in French? Je sais pas moi, des problèmes. I don't know. Whatever. You see, I'm losing my French actually. So that closing exactly at that level is not random. And this morning, look where we're actually no. Actually, let me be more precise. We are opening exactly at the EMA 8. We closed slightly above it yesterday. Yeah, we closed 392. But this morning we are exactly, if I hover over this moving average yellow line on the right hand side, that's where I'm reading it. I'm reading it here, and you guys can see that. It's 390.06. According to the good people at TradingView, we are starting, SPY as of now is printing 389.91. A break below moving average, its major moving average, such as the EMA, is usually a signal of a change of trend in either. So a break below it signal a reversal of the prior bullish trend, and a break above it signal a reversal from the previous bearish trend. Example in case here, right? So let's say these candles on here, this was this big candle that I'm hovering on right now. It was on January the 27th. We gapped down and we closed below both EMA 8 and EMA 20. The next day, bounce, as these markets love to do. So you bonds, imagine trading this as a trader. So here we close this day on here, and you're like, all right, the trend is bearish. The next day, my friend, a SPY gapped up from 374.41 to 376. Okay, so depending on your mindset, you could have said, okay, just the gap is going to resume the trend. No, on that day, he actually went and posted a high at 381. That's a whooping 7 points in just 2 days, my friend. That's a lot. Yeah. And then, okay, at the time, let's say at the time we're trading at, let's say, 381, if you told yourself, oh man, we are back to bullish now. Yeah. Because that day actually it gave up all of that run, almost all of half of that run to close at 377. And then the next day we are gapping down. This is just so difficult to trade. I kid you not. So it requires so much discipline. And hence, rarely would you see me take position on SPY over a course of several days. Yeah. Hence, our preferred strategy on SPY, it's literally day trading, if you will. Yeah, because of this. Because every new day, especially on expiration day, today is not expiration day, but between today and tomorrow, expect a lot of wahala. So that's where we are starting on there. So 2 consecutive days now as SPY and the other ETFs, as we are going to take a look at very quickly here. QQQ, it's down as well in pre-markets. I do not know exactly how the so-called, because they will always tell you, the headlines will always say, oh, the market is doing ABC amid whatever, some type of economic statistic that they want to give you. So in this case, I don't know. It has been bearish because I've been watching it for the last couple of hours at least. So in terms of, I'm looking at my calendar here, and so in terms of the jobless claim, the weekly jobless claims, right? So let's see here, what was the report? It usually come in at 8:30 Eastern. So they reported 833,000. The previous number was revised a little bit higher, and I don't see any forecast on here. So, I mean, it's within range of what has been happening in previous weeks. So we cannot really say that the market is down because of that. These indexes were down, have been down for a while now. So QQQ is down -1%. Here's what we need to know, you and I, you need to know. When a market starts, the markets in general start at these type of levels, right? So we are beginning a day and the market is down -1% in the case of QQQ, -0.65% in the case of SPY, -0.72% in the case of IWM, the Russell 2K. It is a no man's land, meaning only 2 things can happen. Yeah, either they are going to post a lower value than that. So for me, looking at QQQ at this level, -1%, scenario number 1, then it goes to -2%, -3%, and then at some point, there's going to be a rally. I kid you not. There's going to be a buying of the dip. So at some point, so that's always the scenario. That's what, for me, I've said many times, right? As an option trader, when the market is doing things like that, the sky is not falling in any case. We keep calm. We are to be able to take advantage of this movement. So meaning a lot of stocks are going to be moving mostly on the downside, So if you are well versed with your Ganser strategy, if you don't know what a Ganser strategy is, maybe this is your invitation to join Successful Trading. Yeah, you go to successfultrading.com, you check it out, and we will teach you how to take advantage of it. This is a dream scenario for weekly option trading, because guess what? OPEX is tomorrow. We have 24 hours, the 6.5 hours of trading, but then plus tomorrow, you can set up all type of very profitable scenarios on here. So I'm looking at the stock on here in our broader watch list. Oh my goodness, it's so if you were holding calls and puts yesterday, congratulations. Those puts, they will be valuable. Though puts going to be expensive. We know that, right? So meaning if there are any type of bonds, that's where really the Ganser strategy it excel the most. The calls are going to be cheaper, hence a reversal later in the session today or tomorrow. I'm not saying there's going to be one. I'm saying in the case of, because that's how we trade the Ganser trade. So enough said onto that for those who know that. So we say hello to Zorbon, Miss Marcy, Miss Festus, Mr. Wayne, welcome to the show, and Mr. Andrew. There you have it, folks. Those names that I read each and every day, they are the partner at the firm Successful Trading. So we thank you, folks. We are doing this for you. So as such, there are three stocks that Zorbon is printing on the. It just has to print stock. Keep. I'm assuming that Zorbon would like us to take a look at those, so we will gladly oblige. Let's go see here. We bring another window. Did I look at IWM? Let me not do any injustice to IWM. Yeah, here's the chart of IWM in case somebody could have been expecting that one and we didn't. IWM actually closed just yesterday slightly below. It was one of the weakest one. To be honest with you, I was trading it. It didn't make any wave way toward the end there. Toward the end of the day, I thought it will really provide an opportunity to close back above its level. It got stalled at 224 or something. So what I end up doing at the end of the day, because, hey, trust me, guys, I don't know the direction of this. So I ended up settling with a strangle. So a very cheap strangle. So this morning, I mean, gapping 1.5 points. The put side of that strangle may start providing some benefit. But in order for IWM to really anything to pay under, we need another 3.5 move, which we can get between today and tomorrow. So again, the expiration, the weekly expiration on IWM is tomorrow. So here, the closest support that we are looking at here, if it's starting at 222.47, will be the EMA 20, the green line on the chart. That's I need to make sure you guys are seeing. So that's currently stand at, on the daily chart, the EMA 20 for IWM stand at 218.76. So if we get there, yeah, we will definitely we'll be taking advantage of our puts. All right, so that's that on all the ETF. So let's go to the first stock that's the traders wants us to look at here. I believe it was ERJ. ERJ. Yes, ERJ. The name of the company is Embraer. Is this Canadian? I don't know because I'm not familiar with it, but I've heard of it. I've heard of it before with some Wahala with Boeing and on the like. So on the daily chart, let's take a look at the daily chart. So on the daily chart, let's say over the longer period of time, this just broke out recently. It broke out of this long-range consolidation that has been going on since December, early December, and it broke out above 7.5. Yeah, we've talked about these scenarios before. Yeah, here you see a stock that, okay, prior resistance was at 7.5. It's the third time was the charm, and then over the last couple of days has been able to break out of that, and this morning is starting further. So in order to see potential resistance, we are going to enlarge the chart by going to a weekly time frame. On the weekly time frame, this is what it looks like. Yeah, this stock used to be an $18, $20 stock. So right now, it is just trying to get there. So yeah, it has the pattern of one of those stocks that when they start the run, because you see how stock fall? It took it 5 days to go from $20 to literally $6. So now on its way up, it's more difficult. But hey, this is a breakout on there. So as usual, the only thing on here, it's maybe it's not, it may or may not do this in the same amount of time that it took. So if it's got too hot from a technical point of view, it will have to come and retest the exponential moving average yellow line there and go again. So that's how stock typically tend to trade. So yeah, all bullish on there on ERJ. Next stock, GSKY. Grensky. I have no idea what business they are into. Oh boy. I mean, my friend, this is a copy. This is a copycat of the same chart. Yeah, it's the same thing. This one is has not broken yet, but it's trying to break above $7, which was its prior resistance. And it used to be a $20 stock, so same thing applies here. Exactly, it has the same pattern. So when people say technical analysis, technical analysis is not that difficult. Yeah, after you will see pattern exactly the same scenario. I don't know, are they in the same industry? I don't know anything about Grensky. I have no idea, but I'm seeing exactly the same thing. So yeah, this breakout on here it's looking bullish. Those stocks will have a tendency to get extended for a while, right? So again, they may cool off just to come back to the moving average before going back and resuming the bullish trend again. Okay, third one, Twitter. No, I don't know where I get that song. that song from maybe from one of the movies that I watched. So example, in case here's Twitter. Twitter broke out of this long term since November. It was stuck at 52, right? And then towards its earning, it was just bullish, higher highs each and every day. And then after the earnings, remember how one of our strategy after earning, the subsequent week at least, it's worth keeping an eye on a stock. So because there are moves, folks, there are moves that are really better than taking a gamble even before earnings. In this case here, so Twitter attacking the upper Bollinger, obviously is a little bit extended on here. So potentially, could it come back to cool off at the EMA 8, which is about $67 there. I'm running up. So it's starting at 70.49 this morning, gapping down with the rest of the market overall. But really, Twitter has been very prior to its earning, this one of those is always easier to see it afterwards, right? But we know of it. We know of this strategy, just that sometimes it gets expensive. So let's say a couple of weeks before earnings, certain stocks have this tendency of just having the bullish run. So in the case of Twitter, the earnings took place February the 9th, yeah? And so 1, 2, 3, 4, 5, 6, 7 days before, from 52 to 60. That's not bad for Twitter. I kid you not. So you will have had to stomach buying that with higher increased volatility. But the fact is that going toward earning each and every day, that's closer. Each and every day that we get closer to the earnings, the implied volatility actually has a tendency to going up. So if you have the position already, it actually gets appreciated just from that itself. Plus, on top of that, the price appreciation on here just make your option even better. That strategy is just that it's sometimes a little expensive, but in the case of Twitter, that's the perfect scenario that it did here. And then the after earning, oh my goodness, that was just something else. We traded this last week a little bit, so we made some money. No, nothing, but we made some money on that. So that's what Twitter has been doing so far. All right, speaking of earning. Okay, speaking of earning, did Walmart has earning? Because I saw it on the watch list on my I start my pre-market analysis on my phone, folks. While still in bed. So Walmart, we can definitely take a look at that. So, yep, it had earnings today, and it is down. Whoop. Walmart is down from 147 to 139. How about? The bet here again, maybe the best trade would have been prior to today, because we don't know what the best trade is going to be. Yesterday, day trading it. Remember that strategy again. Again, we give you tools on here. Big candle from 144 to 147. That day trading, and then you close the position before knowing that the earning will be this morning. You close that position. It will. Let's go look at the 15 minutes candle chart from yesterday. It wasn't straightforward. It wasn't straightforward because we gapped down. So from here, then it gave you some hope, and then cooled back, and then rushed up. And then this morning, guess what? Oh my goodness. Imagine trading this yesterday if you are a newbie into option trading. Oh, the stock has earnings. And then let's say the last couple of hours, I mean, it seems it looks impressive here. It's a $1.50 rally, right? So you think that that's announcing actually an earning bit. So you keep that position. And this morning, major disillusion, right? We are starting at 138. So we have a quant analysis for Walmart. So obviously with the gap, it's a fair game for Gangster. What can I tell you? Why may I share with you vis-a-vis our Gangster? Because it's a popular stock. I'm sure we have it in our quant analysis. So I'm opening that document there in a separate screen. When it opens, I will bring it to your forefront. That's the only intelligible thing that I can tell you. I can tell Mr. Win who's asking about Walmart. I mean, The chart was bullish prior to that because yesterday we closed with a big candle convincingly above both exponential moving average 8 and exponential moving average 20. Okay, so let me share this. Let me share this because okay, because this is something rare on here. Then you guys will then hopefully I will provide insight into the so-called quant analysis document. Okay, are we able to see this? Let me make sure that oh, I zoom too much. All right, let's make sure that we see it all. Okay, okay, folks, and I'm going to show you another one actually. Okay, so the goal of this document, is to identify opportunity that exists after a stock has had earnings. Yeah, so meaning that by how much potential. From a visual point of view, the number of red cell and green cell is what dictated. So when I see this, first of all, I'm seeing more red cells on day zero meaning the same day as earning, because these earnings are BMO stand for before market open. So here, yeah, there has been some typical type of move, not on the bullish side. So that's information on here. For this is how many? 4, 8, 12, the last 16 earnings. Walmart has managed to move more than 1 point. We color the red cells, the red and green cells here, that colored for more than 2% in either direction. Yeah, more than minus 2% in the bearish direction is color red. More than 2% in the bullish direction is color green. Yeah, not that much here. Yeah, okay. But for me, when I see this, it doesn't tell me that I can expect. I mean, yeah, I'm not saying that don't trade it today on a Ganster, right? But I want to show you another one, yeah? Meaning that the scenario, the how do I use this document? I'm going to say, okay, so today we have earnings, yeah? Walmart is one of them, but there could be others. If it's only Walmart, definitely I will pick that. So for me, I'm going to show you 2 of them, and hopefully you took a mental picture of that coloring on Walmart, and you tell me which one you prefer. Or which one will you go for? Because again, the goal is to maximize the probability of in a trade, meaning that what is the chances that that one's going to get you, it is going to be worth it. That's really key. All right, so I submit to you, we saw Walmart earlier. Sorry, folks, I cannot put them side by side. If I was smart, I could have prepared better. But you show the chart of Walmart. Now I'm showing you the chart of IQ. You tell me which one you prefer, or which one is giving, not you prefer, because that's what I'm not asking for your opinion. I'm asking you to answer the question based on the data that's submitted. I see more green cells and red cells on here on IQ. Hence, the first thing that when I turn on the computer, Ganser trade number 1 for the day was IQ. That's the value of this document. That's the value of. That's why for us we have been telling traders, hey, this is a super edge into trading earnings. Hey, yeah. But I mean, so far we have made so many videos. Actually, our videos on earnings, they have no hits whatsoever. None. None. And we are not mad. We take advantage of it quietly. Yeah, a la CVS earlier this week, and we are looking forward to what IQ is going to bring to us. So we showed you IQ. Let me show you another one, and the second one for today. This one, Baidu. I see more red and green, so meaning that the better probability for movement than Walmart. Again, I'm not saying that Walmart's not going to do it today, right? We cannot trade them all. So hence, for me, I'm not trying to justify myself. I'm just showing you the reasoning. So hence, both Baidu and IQ, they are the one that we put as our Ganser trade today. Hopefully, this data is able to provide clarity, information in our decision making on how to use the earning quant analysis document. Thank you for setting me up in such a manner. Trust me, I did not check with Mr. Wayne in there. TWLO. TWLO is a relatively new stock. We don't have it in our quant analysis document, but yeah, TWLO has earnings, and TWLO is gapping up big time. TWLO is gapping up to the tune of yesterday was 12%, and then this morning was 10% or whatever. So yeah, they're about there. So Yeah, TWLO, you can use the ATR technique or anything. Just again, it's choice. That's we have to make. What do you decide to trade? So for me, to be honest with you, TWLO here is going to start outside of the upper Bollinger. I've been wrong before, but my buy is going to be on the put side, meaning that TWLO is up 8%. The puts are cheaper, and therefore, if the market really, really goes further down, I'm going to be looking for. But in a Gantt scenario, folks, it's just that you have a bias on there. If you start going in that direction, you will add more, and also the puts are cheaper, but you get both direction on here. So, yep, TWLO qualify as well this morning. You cannot go wrong, folks, during earnings season. The only thing that could be, it's like, hey, you pick a stock versus the other. Hence, for us, we have this quantitative analysis document to help us further in the decision making. That's as simple as that. All right. Oh, this is good. Thank you, folks, for bringing this up. There are a couple of stock that's actually maybe three of them. That's we want to just talk about, because yesterday I wanted to, and I think I got excited and I forgot. Our friend here, I don't know, I call every stock our friend. And typically, like, when somebody say our friend, that's usually, it may be like a pejorative now. Okay, have anybody been checking what has been going on with Apple? Over the last couple of weeks, don't trust me, I've been watching. I even took tiny position trade. They did not make money. Trust me, they didn't make money. 2 weeks ago, they didn't make money. Last week either. Quietly, this week, Apple is breaking below exponential moving averages. Both the EMA 8 and the EMA 20 are posting lower lows. This morning, it's even further down than yesterday. I guess, I don't know. I didn't follow the whole news yesterday, but a lot of big shots, people with big money in this land, they reported the position, how they're adjusting the portfolio. I believe Mr. Buffett reported that maybe he trimmed his position on Apple or something. That could have been that. But other stock like Wells Fargo, which the same thing happened, that stock has actually been up. I was watching pre-market this morning. All of the financials were down, but Wells Fargo. Go figure, yeah? But I want to bring your attention on here. A bearish trend has started here on Apple. It was a long time coming, trust me. After this crossover, sometimes I like to use the crossover on the daily chart on the MACD, but it went sideways, folks. There was no making money here. And then this week, obviously, because my attention was somewhere else, those now are making money. So, yeah. Talk about Wahala. Well, the other stock that I want to bring here is this one, Square. We talked about the gappers, the perennial gappers, Square, PayPal. Both of them are starting red this morning. I don't know what that means, but that got my attention. So because I don't think that TradingView is doing a good job on here of showing us pre-market level. In pre-market level, Square is down 3% at 262. So yeah, that's enough for me. 262 is exactly just above the exponential moving average yellow line on the daily there, which is at 261.83. So Square, anytime that you talk about Square or you study Square, study PayPal, yeah? 2 for 1. That's how I call them, the cousins. So it's down as well on here. As a starting point, they do not sleep on those because they are big movers. The whole market is moving today. So things are going to be shaking a little bit on here for this Thursday, February 18, 2020. This was pre-market analysis daily. Hopefully your question will answer. Hopefully you find yourself better prepared into the business end of this OPEX weeks. Thank you, everybody. Have a great trading session, and we catch you tomorrow, God willing. Bye-bye.